Good afternoon, everybody. Today's date is 6/15/2013. Happy Father's Day. And what do we have here? The TQQQ Daily Pro Shares Ultra Pro. What is it? It is the Bull ETF. Now, let me show you something that's very important. MMTs. This is the S&P 500 Daily Standard Poor, the S&P 500 Daily Chart. One thing that you're going to notice, once again, MMT, is the rising long period called the 50-day moving average and this beautiful bull run, meaning that there's a lot of bull built into it right now until it collapses below the 50-day moving average. Now, what do they both have in common? This is the S&P 500. See, S&P 500 daily. What do they both have in common? They both have that long-term bull rising 50-day. On the weekly out view, on both, here's the bull weekly. They both have something in common. The rising 10-day or 10-weekly moving average has been this bull support from the bull run of this 10-week daily moving chart right here. That blue line is what I'm really talking about. And I want you to see the two long-term bull constructive trends, period. End of the story. What we are going to be doing next, MMT, is we're going to be learning how you, as a market maker, can short the bull and go long the bull, but not only that, that you can get over here in the various strike prices. And listen, what we'll be looking for, we'll start this thing at, they're in dollar increments. So they don't move with a lot of premiums. But we'll look at some of these setups and see if the daily range will let you make some money on the contracts. One thing that I can clearly state ahead of time is that you're going to have to buy heavier volume to really make the profit. So the bigger traders that we have in the network, well, you know that you can buy 100 contracts or 50 contracts. The smaller ones, it's going to have to probably be like 10 contracts. So that's our next assignment for Monday. This is to compare the S&P bull trend 10-week moving average along with the TQQ weekly bull trend and where the dips have been bought, where the reversals. This bull can be traded, this ETF can be traded intraday. You can also short it. It's hard to borrow list if we have to get it, but it does have movements. And if you get 500 shares off support, they don't move a lot. This is a weekly chart. Back to the daily on both of them. Here. This one has a range of, let's say on this day, from the upside. So the low was 67 and the high was 70.9. And that was on 6/13. That's this range. This bar had a low of 67 and the high, once again, 70.97. 50-week moving average, 67.5 for now. That's a daily 50-day moving average. Correct it. It's not the weekly, it's the daily. Now, look at the bear is in control, but this TQQ looks just like a lot of the other charts. It looks almost identical to the S&P 500. So on days I want to get long that, and on days I want to buy calls on the S&P, and I want to get long when this is working. You can see how identical the trends are with the daily S&P 500 and that bull. Yes, you can see where reversals started. Don't you see them? They're right here. Don't you see that bull? That bull reversal, that S&P reversal, this is what that looks like. This is what we're going to be doing next. That's the update. We know where the support and resistance levels are going to be. When this thing is selling off, you want to be short equities. And you want to have NASDAQ 100 puts. When this thing is breaking out and failing, but it's got that rising 50-day moving average. Once again, in the video, QQQ up here where the pointer is. Once again over here, S&P 500. Look at the 50-day moving averages. Long-term rising 50-day moving averages within the broader 6/15 middle of the year trend on both. And the bull steps in every time, Great intraday trades on the TQQ. You know, you get 500 or 1,000 shares, or as I teach you how to do 2 or 3 different limit orders to get in at the bottom at different prices, you can make some fairly decent money on the QQQ versus the S&P. They're identical. And a lot of equity charts look the very same as the TQQ. Here, I'll just show you. Google. Look at Google. Look at when Google went down, we had this Google daily chart. You can see the relevancy in the trend. Pop up, sell off. So when the TQQ sells off, then you're buying puts here. And when the TQQ is bouncing here, you're buying calls. And when you're buying put options on the TQQ here, you can see the volatility. Google had it too when it was up here at its tops. But you can see how relevant it is if you take a look at something like Netflix to compare it. Let's see if we can get a Netflix. Here, daily Netflix, QQQ. Look at the similarities in them. Look at the rising 50-day on Netflix. That's the rising, and they bounce together. And getting long here is what we need to do. Until they go below it. Once they go below it, they can sell down through here and close in some of these other highs that were over here. And some of these can, you know, look at, we'll find out. But here, let's take a look at Amazon versus the bull. See? Amazon daily chart. There's the high reversal here. There's the high reversal here. But there is a connection there. Let's take a look at another one. Price line. Price line. QQQ reversal, just about identical. It pops. TQQ sells off. Price line goes with it. It pops up. You can see how the volatility works. 3 days up, and then a rollover, and 3 days up, and then we rolled over right back down. That's the relationship. Price line's a good benchmark. Not only that, let's take a look at Apple very quickly. Let's take a look at Apple and the TQQ. This is where Apple, look at right here, and it's right down here. That's the comparison. And one thing about Apple, though, Apple breached and got back above its 50-day moving average. That's an important support level. And I had already told people that. Okay? TQQ has an up day, and so Apple comes up off of the bottom. That's the comparison for the MMTs.